So today I got a very interesting stock that I want to share with you guys. I'm going to share with you this particular stock that is part of the dividends aristocrats. So there's this particular stock that has been undervalued for quite some time, and is this stock called 3M. So it's a very innovative company which I like a lot. Unfortunately, as I study into the stock, I realized that not all dividends aristocrats are made equal. Can you see that for 3M, the stock price has been going down since 2018? That's almost 5 years plus. So don't just invest for the sake of dividends. We must always go and look back at the company's fundamentals. So just taking this as an example, there's this particular site that I like a lot. It's called Jita. Jita is a website that I pretty much like to use for a very simple reason. I know the founders myself, they want to make fundamental investing more visual. This website is free. A lot of us, we use technical investing. Example, you can see the charts, downtrend, uptrend. For fundamental investing, they make it visual using two things. Number one is the value line. Can you see? They call it the Jita line. The Jita line aims to look at the fundamentals of a business and evaluate how much is the business worth. It's a quick and easy way. It is not 100% accurate, but so far I use it as a benchmark myself. Okay, so you can see this is the value line and this is the price. The blue color is the price. So when do we buy it? We buy it if you are just following purely based on this particular idea. You buy it when the blue color line is below the dotted line. There's one thing I do need you guys to take note of. Even when we invest, we don't just invest in undervalued stocks. We invest in a stock that is growing fundamentally. So the dotted black line should be going at least up. If it's going down, there's no reason to buy, even if the price is cheap. The reason why I'm talking about this is because it's a big company. A lot of people are looking into it. I think I've received PM asking me about 3M. So how do I look at it? First of all, the Jita line. If you look at the fact sheet, I think a lot of things will tell. So for the fact sheet, you can see that the revenue, it is stagnant over the years. Can you see that? 30,000, go up to 32, 32, 35, 34, then 32 again. So it is not very strong. And you can see that the Jita line is very affected by the profits, the net income. So therefore, you can see a huge dip down, right? It's because the net income is negative. And it's negative because, as mentioned, there's lawsuit, there's losses, and quite a number of supply chain issues as well. So this is what is happening to 3M. Okay, is it a good time to invest now? The key concern I have is the technicals is very downtrend. It's so downtrend that I think it has lost favor with the stock market. Unless you're buying it for the next 10, 20 years, holding it, not bothering about it, just collecting dividends, I think it's fine. But it doesn't make sense for a lot of us because the dividends they give us is also being taxed. Okay, so this is the thought process. Again, just want to check with you guys, is this useful? Is it useful to actually share the thought process? If it is, you can help me type yes, so that I will spend a bit more time talking you through, guys, all this. Okay, can Now, the stock that I'm going to talk about today is this particular stock. First of all, can you see that the Jita line is going up steadily? Now, if it's going up steadily, right, one thing you can be for sure is that the revenue and the profits is increasing in a steady fashion. It is not a very high growth company, you can see that. And when it's not a very high growth company, we can use options to buy into a company that we know is stable, but it's not growing very fast. We can use options to give us that kind of leverage without the kind of risk. Okay, so what company is this? It is called Consolidated Edison. Now, any one of you know of this company? If you do, can you all please tell me what is the stock? What industry is it in? Or what is this company about? Anybody knows? It is not a very well-known stock, not at least not in, I would say, outside US. If you don't know about this stock, you can make a guess. Okay, based on the name, what is it talking about? In my Telegram posting, I mentioned that this is a very shocking stock. Okay, why is it shocking? Yeah, it's a light bulb. Okay, Edison, good job. Okay, it is utility company. They provide electricity, utilities to, I would say, they provide to another place. Okay, so I just want to actually remind you guys, just a couple of weeks ago, where's my other, okay, just a couple of weeks ago, just want to explain. I talk about another utility or energy company called Nextera. Okay, if you have been listening to this portion, I do like utility companies for the very simple reason we know how to use options. If I don't know how to use options, I probably won't touch utility companies because utility companies is actually quite stable and a bit boring. But Nextera, they are swinging a lot into renewable energies. And the key place, just to share with you guys, the key place that they are focusing on is in Florida. So now I'm conquering the whole entire US. Okay, actually not really conquering. Another big city. Consolidated Edison, right? Edison is not. Did I say Edison? Edison is my partner in another program, AI. Okay, it's not into Florida. Consolidated Edison, it is all the way into New York, which is a very busy place in the US. This company, I see a lot of, I would say, bright future. Okay, bright future. Okay, they gave electricity, right? Okay, so it's a gas and light company. It's one of the oldest and largest investors-owned energy company. And as you guys can think of, who do you guess is the founder? Okay, Edison, correct? I want to share a few key things about this company, right? This company, again, serving mainly New York, okay, and Westchester, okay, Westchester County. And I want to share a few key things. The business model is very simple. They deliver electricity, deliver gas, deliver steam, okay, and they actually make money. That's about it. So if you know about in Singapore, who is the big utility provider? Do you all know that? Or in Malaysia or the country you are in? Do you know the big utility provider? And even right now, as I'm talking to you, they are making money. Why? Because we are using electricity. Makes sense. Imagine you owning a company that is making money every single second. How do you like that? Like Warren Buffett said, he loves this kind of company that every single moment, you know that every day you are making money. So there are a few companies that's like that. One of them is utility company. Okay, as you all mentioned, SP Group, Singapore Power, right? So it's making money every single moment. Okay, of course, there's a certain running cost, but you know that the demand will continuously be there. I think I remember another company that Warren Buffett mentioned, right, is Gillette. You remember Gillette? Okay, Gillette, what they do is they are a shaver company. And he said that every morning when he wake up, he just imagined the whole entire world, the men's beard is growing every single second. And he feels so excited because why? Their beard grow, their mustache grow, they will use a shaver. Okay, so this is the idea of it. Okay, business model very simple. It's actually utilities. Now, the customers and the revenue, right? I just share with you some very interesting thing. Some of their iconic customers, I won't say it's their biggest customer. It's basically like the Statue of Liberty, the New York Stock Exchange, Madison Square. Okay, all these, what's the key thing? They are in New York. Okay, so in fact, all of them, they are using Consolidated Edison. Okay, it is, you own this company, you know that you're serving some of the iconic places. Not that it really matters to us, but it's just fun fact, right? You can see that, okay, all these big numbers, right? In the end, later we're going to look at the whole entire flow. Just now we've seen that the revenue is pretty stable and growing. And later I share with you why it has growth potential as well. I want you guys to notice, it's not going to grow very fast. In fact, it may be a little bit stagnant, but it will grow maybe every 1 year, 2 years, grow about a few percent, but that will help us in our option strategies because it's growing so steadily and so stable, right? So steady and stable, okay? There's not a lot of surprises. Economic mode, they listed down quite a few as I did my research, right? But I share with you, the key economic mode for this company is regulations. It is not easy. It is almost impossible to go to New York to fight them in terms of utilities. Reason being, right, to get the regulation, to get the license to do that, right, is not easy, okay? And for them, I'll share with you 3 things that they are doing. Number 1, they are shifting a lot towards renewable energy, okay? So they are really like changing the way they also generate the electricity. They are also going for wind power, going for water, okay, going for all the kind of renewable energy. What this means is, moving forward, you can also be quite assured that they will be sustainable. Because nowadays, a lot of companies, especially if you read annual reports, any of you guys read annual reports? If you do, right, you can type nerd. Okay, I read annual report, and every single annual report, so far I've read every single annual report, every single one of them, there'll be a segment talking about how they are going to go green. Okay, how by 2024, 2025, 2026, they want to be 100% on renewable energy. What this means for utilities and electric companies is they got to start to shift towards renewables. If not, what's going to happen is they may become obsolete because a lot of companies already committed to changing to renewable. And as they invest more and more into renewable, there will be an initial cost. So you'll see that there will be an expenditure. However, in the long run, you'll be good. Okay. Second thing, there's this thing called grid modernization. Okay, I was reading into it and I do not understand exactly what grid modernization is until I realized, right, okay, for electric companies, right, last time they will build plant by plant and they will serve like district by district. So example, talking about Singapore, they will have, okay, we actually create this plant, we serve Tanah Merah. We create this plant, we serve Jurong. Now, because they are shifting into renewable, right, they have this grid modernization where they can consolidate all their power station in one place and distribute to all the places. What it potentially means is they will start to save a lot more costs because they don't need to have inefficient distribution of the electricity. Okay, so it is, for example, if you are, I don't know, you are the one delivering some Chinese New Year good, some pineapple tarts. And then you realize that, okay, because Jurong, there's people ordering pineapple tarts, then you actually build a kitchen there to go and serve Jurong. You build another kitchen to serve Changi. You build another kitchen to serve maybe JB. Then you realize that it's very inefficient. You have so many kitchens. What you do is you have a central kitchen. You build all the pineapple tarts. Okay, not build. You bake all the pineapple tarts and then you start to distribute them. You will save a lot of money. The cost saving, right? Significantly, okay, it can be very significant, can minus up to maybe 20-30%. And what that means is your profits jump by 20-30%. Okay, that's how powerful it is. Okay, so this is one thing to actually understand. Okay, so some of you read annual reports. Okay, only a few nerds. Okay, so do have a read annual reports, because I realize a lot of people, you got insomnia, just download the annual report, try to read it. Very likely you will fall asleep. Okay, okay, not many people are very good at writing annual reports. Now, the third thing is, this one I think very obvious. More and more people are using electric vehicles. Now, where do they get a charging station? How do they actually get all this right? It is from all these utility companies. They are setting up all the charging infrastructure. So this will be a big thing. And this is, in fact, quite a good revenue. So that's where there's some growth. But overall, I want to say, for utility companies, they are not going to grow very fast. They don't have a sudden spike, another 100% growth in the next 3 years. They don't have that. So don't expect to double your money in the next 3 years. Okay, 5 years, possible. Okay, with the dividends added on, possible. Now, so what do we do with these kind of companies? Okay, by the way, current challenges, cybersecurity, threats, these are all very, I would say, common challenges to everyone. This is something that is taken from the, I would say, annual report. Now, let me go to the valuation portion. Valuation portion, as you guys can see, the stock price, okay, as I was comparing to 3M, it's like going downtrend and then downtrend again. Let's look at Consolidated Edison. This stock, the ticker symbol is ED, not a very good ticker symbol, but you can see overall is slowly creeping up. Is it obvious? It is uptrend, but super slow. You know what is this useful for? Anybody can guess what option strategies can we use for this? This is very ideal. Yeah, very ideal. Yes, you can write options by using BOSS. You can even do strategy X plus, for those who understand what I'm talking about. Okay, so X plus, you buy a long-term call, then you sell short-term calls. Why? Because it's so stable. Something that's so stable, so predictable, it is quite easy to use all that. Okay, but do they have actually liquidity? If you write options, do you even get enough premium? Okay, let's take a look at it. Okay. Yeah, it's not a nice ticker symbol. Okay. Anyway, for those who don't understand, it's okay. Now, let me share with you, before we go into the details of how we're going to use the option strategy. Wow, today is quite fast. I'm quite excited about this stock because simple stock, I like this kind of stock because it's not very complicated. It's easy to understand. It's easy and predictable. Okay, I love it. Okay, let me show you a few things. If you look at the dividends yield, okay, the 5 years average is 3.66. Current is 3.62. What do you think? Is it overvalue, undervalue, or fair value? Is it O, overvalue, U, undervalue, or F, fair value? Right now, it's pretty much fair value, but you can see it is really very stable throughout the years. I love this. Every time they show an annual report, they show an earnings report, you can see that the stock doesn't fluctuate a lot. When we go into valuation, same thing. For me, I really like to look at price to book value. For those who have not gotten to know me quite a bit, right? Okay, so I like to look at price to book value because, again, a company that is making good income, they need to use the equity, whatever cash they have left. The amount of money that they make every single year, they can distribute to their shareholders or they can keep as equity. When they keep as equity, their book value increases. When they have book value, right, we want them to actually make use of it efficiently. But these companies that we're looking at, they're already making money quite steadily already, okay? So price to book value, you can see 5 years average, 5.12, and then current is 1.52, and then current is 1.47. Slightly undervalued, quite fair value. To me, I think that is quite stable because, again, you look throughout, it is 1 point something, 1 point something. It is very, I would say, fairly priced for the years. No surprises. How boring can a company be? I love boring companies. Okay, why? Because let's go to the last portion. We can sell puts. Okay, for those who understand strategy X plus, do a calculation. You can even do a strategy X plus. Okay, looks good, right? It's very, very stable. Very stable, very boring company. Even the dips, right, can go up pretty fast. Okay, so sometimes if there's dips, don't be too worried. Hold on for it for a while. If let's say you're using selling of puts, okay, otherwise get out of it, then come back in again. Okay, let's look at the 36 days options. This is using interactive broker. Now, the 36 days option, you can see right here, the price right now is 89.47. So 89.47, what we can do is we can sell a 87.5 put. Okay, for those who are very, very new to this, you can watch the previous videos, but essentially what it means is, it's like telling your broker, say Mr. Broker or whatever your broker's name is, help me buy the stock when it hits 87.5. The stock price now is 89.47. So if I buy at 87.5, it is below current market price. How many of you think it's a good deal if you can buy below current market price? Personally, I think it's okay because this stock is really pretty stable. The funny thing is this, you are asking your broker and say that Mr. Broker or Miss Broker, okay, in the next 36 days, okay, if the price hits 87.5, help me buy it. Okay, essentially it sounds something like this. The cool thing is this, once you put in the order and you have not bought the stock, you will collect money. This is called premium. Okay, it's like selling an insurance and telling the owner of the stock, says if it hits 87.5, now it's 89.47. If it hits 87.5, you can give me the stocks, I'll pay you 87.5. Okay, so I guarantee that you can sell your stocks at 87.5. And in return, how much do you get? You get 1.42. Can you see that? The last close is 1.42, so that's around there. So, okay, how much are we getting? So let me just share with you guys. I think it's pretty good. Okay, for any smaller account, another possible thing you can do, if you understand what I'm talking about, again, you can use strategy X plus, which is to buy a long-term call. Later, we can take a look at it first. And then you can sell a short-term calls. Or you can also do a spread. Okay, do a spread. Okay, this one is a little bit more advanced. In case I go a little bit too advanced, it's not that I don't teach advanced stuff, but because I didn't prepare the materials for it, I do not want to teach just on the surface and you test it wrongly and then you may get into trouble. But I'll try my best. Okay, I try my best. Okay, so now let me explain. So let's talk about selling puts first. Selling puts, the amount of capital you need is 8,000 plus. Okay, it's 8,750. And what you get back in return is 1.42. So 142 as an income. It's like an income strategy divided by 8750. So you'll be getting about 1.6% per year, per month, 1.6% per month for very stable stock. So I pretty much think that it's quite a good addition, okay, to your portfolio. Okay, it's really a very stable stock. Okay, how many of you think that it's a good idea? If you think it's a good idea, you can add this to your portfolio. Now, another possible idea you can do is this. I'll try my best to explain. If you don't understand this, please don't rush into it. Okay, another idea you can do is this. You can sell a spread. Okay, so what do you mean by sell a spread is this? So essentially, you sell a 87.5 put. I'm going to put a sell, okay, and I try my best again. And then, okay, let me explain now. So you sell, are you able to see that? If you can see that, you can help me type Y just to make sure you all are still with me. Can you all see that? Y, okay. So if you sell a 87.5, 1st of March, is it 1st of March? Okay, is it 1st of March? Sorry. 15th of March, is it? 15th of March, put. Okay, you are actually telling, example, there's another person who has the stocks. You're telling the person, again, if anything happens, I insure you. Can you all please type INS for insurance? I'm selling an insurance. I sell an insurance and I cover you at 87.5. If your stocks goes to zero, goes to totally nothing, I will still pay you 87.5 per stock. Okay, up to 100 stocks. Okay, 100 stocks. This is what you can do. Now, if you do that, what is going to happen is you are going to collect premium. Okay, and the premium you're collecting is 1.42. Can you see that? 1.42. Now, and then at the same time, what you do is, because you sell an insurance to cover someone, you take the money, you take the premium. They pay you the premium, 1.42. You take the amount of money, you go and buy an insurance yourself. So you reinsure. It's like a reinsurance. Okay, for those who understand what's reinsurance, this is actually what it means. Okay, so you can see right here, I sell a 87.5 insurance, I buy a 85 insurance. So I cover myself. So far, does it make sense? If it makes sense, please help me type SS for cents, okay? So I'm hoping that it's not too complicated right now. Okay, I'm really hoping that it's okay. Okay, so what is happening right now, right? In fact, when I click on the profile, I can send this. So you can see I've set this strategy, right? Once I add this strategy, okay, I send it over, right? Okay, what is going to happen is I'm going to make $55. Okay, guys, I'm going to make $55. Let me just screenshot this and try to explain this, and then we can call it a day. Okay, I'm supposed to just talk about stocks, but now we are going a little bit in depth into options, but I love it. I love the enthusiasm to actually learn things. I love the spirit, okay? So before Chinese New Year, again, guys, I want to share a few things. In case if it's too much for you, number one, please don't take it too stressed upon yourself. Slowly learn, you hear a few more times, you test it out with paper trading. If you can afford, test it out a bit, okay? So anyway, coming back to here, so let me explain a few things. Let me try my best to explain this. Okay, you all can see this, huh? So what is happening right now is the particular stock is at 80, how much is it? Okay, what's the stock price right now? The stock price now is 89.77. So what we are doing is we are selling a 87.5 put. Remember that? 87.5 put. And we're going to collect some money. I think it's about 140 something. Just now I mentioned 140 something. I'm just going to use this number. So after we collect the money, we are going to reinsure. Okay, we are going to buy an insurance to cover ourselves. So we're going to buy 85 put. Okay, so both is put. Okay, I sell a put, I buy a put. Okay, why? Put is insurance. So I sell insurance, I buy insurance. So I will buy the insurance taking the money I have here. You can see that right now. Okay, I'll collect 1.42. Okay, 1.42. So you can see right now, right? The amount of returns I get is 55. They already calculated for me. In the end, okay, imagine it's 1.4 to 1.45, right? Okay, meaning to say I must pay about, okay, how much is that? $90. I must pay $90. Okay, I collect 145. I pay $90. I'm left with $55. Okay, I mean, based on these numbers, does it make sense? So my net amount is $55. If it's, you all can understand so far how many times 55. Okay, this is a slightly advanced rate. It's called a spread. Now, so what is the worst case scenario? I already collected this money. It's like my insurance money that I take a portion of the insurance money to reinsure myself. The worst case scenario is the stock price goes down. If the stock price goes down from 89.77, goes down to let's say $70 or $80. Remember, I am forced to buy the stock at 87.5. So I have to pay $8,750. I have to pay to buy 100 stocks. Make sense? Now, after I actually pay $8,750, what I can do is I can after that sell. Okay, I sell my 100 stocks away at $85. So I collect, I'm going to put COL, collect $8,500. So far, are you all following me? Okay, this is the worst case scenario in case the stock price goes down. I'm collecting $8,500. So in the end, how much money do I lose? I lose $250. Yes, very good. Some of you get it. You can see, but my maximum loss is 194. Okay, probably because of some commission as well. Why they put my maximum loss is 194? Because I already collected $55 upfront, which is here. Does it make sense? So if you minus $55 is about 195, okay, about 194, probably another $1 missing goes to brokerage. Does it make sense? So my maximum loss is 250 minus whatever I already collected first in the first place. So this is how a spread works. Now, this particular strategy, it is useful if you have a smaller account, okay? In case you think that this is a good company, I think I want to get it, okay? However, I don't have so much cash upfront, okay? This particular strategy requires you to have $194 in your account to begin this trade. Personally, I have to tell you something. This strategy, you're actually putting a bet. You're betting that the stock price doesn't go down in the short run, because if it goes down, you actually do lose 194. Your brokerage firm requires you to have only $194 to enter this trade. For this trade to be winning trade, you not only must understand this, I would say, option strategy, your technical analysis also must be quite strong. Okay, got it? But overall, if let's say you want to just test out this strategy, you want to really understand how this whole thing works, the maximum risk you are risking is 194. You win $55. So the risk to reward ratio doesn't totally make sense unless you totally believe that based on technical analysis, or it will not go below a certain amount. That being said, I highly don't really recommend that you do a spread. Okay. In fact, if you want to actually start with a better, I would say, smaller account, you can also do a long-term buy call, then you sell call. Let me go back to today's stocks that we are talking about. We are talking about Consolidated Edison, okay, which is a key player in the energy sector with very solid foundation. And this is a stock, you can keep it and know that you will be there. But for this stock, if you are really starting, you're very new, you can choose to buy one or two stocks. If you are a little bit more advanced, I would rather you use this stock for option strategy because it's so stable, you can do a lot of things. Later after this, I'll be putting the recording into this website, Super Humanitarian. Please make sure in our Telegram group, that's where the next stock report will come out. So I do hope that you guys enjoy this session. Have a wonderful Chinese New Year. See you guys soon. Bye-bye.